Good morning, I'm Raine Musñgi and welcome to Follow the Money. Join us as we explore the tools and insights you need to jumpstart your financial journey. On this episode, we take a look at the benefits and risks of investing insurance. Can insurance turn into a financial asset? Let's ask our guest for today, Mike Enriquez, President of Sun Life Philippines Investment Management and Trust. Welcome on the show, Mike.
Hi, good morning, Raine.
And
Thanks for inviting me here to BNC.
Good to see you again. Mike, let's just do a quick brief of the basics for those who are new to insurance. Can you share with us the different types of insurance available and how they align with common financial goals like retirement planning, education, and income protection?
Okay, so I think that's a very relevant topic right now, Raine. And if we talk about life insurance, since Sun Life is mainly catering to selling life insurance products. So we can start with the most basic one, which is a term insurance. This is similar to your car insurance, where it terminates at a certain number of years or every year. That's the cheapest, simplest mode of insurance. Then you can go to whole life, meaning you can insure your life until the time that you pass on. And then there are more innovative products such as endowment plans. And then you can add on critical riders, for example, if you get hospitalized. And then there is an insurance specific to that you can attach to your main insurance. And then the last one, which probably was the most popular over the last few years, would be the investment-linked insurance products, where now it crosses the line between protection and investments.
And we will delve into that a little more later on, but given the rise in health-related issues, accidents, and job losses in recent years, especially during the pandemic, how has the demand for insurance products changed? What should individuals consider when choosing a policy in this current environment?
Well, Raine, sadly, the Philippines is one of the most underpenetrated countries when it comes to life insurance. If you compare ourselves to the other Asian markets, as a percentage of GDP, I think a life insurance is just, I think, under 2% of GDP, as opposed to other markets where it's already closer to 3-4% of their GDP. So there's still a lot of room. Acceptance is still not there. If you think about it, people deem insurance as an expense rather than realizing the benefits of having protection on your life. And this has changed a bit during the pandemic, admittedly, but there was obviously a very conscious effort on health and how you protect yourself when it comes to sudden problems such as death, sickness. So those were the realizations over the pandemic, but the reality is it's still not really fully accepted. And I think one of the biggest hurdle of this is, number one, cost. Second would be right understanding of the product itself. Because as I mentioned a while ago, there are several insurance products. You don't need to go immediately to the most expensive. You can just buy something that probably can suit your need and then slowly build. It's like having an investment. You don't need to start big. You can probably start small, and then as you grow your income, you can continue to add on. And depending on your life stage, and as you grow, for example, you have a family, then you start looking at other types of insurance. But the important thing is you need to have that as part of your financial needs.
Right. Well, we will talk about the underrepresented market in the Philippines later on, but I do want to touch on how perhaps maybe the cost would be worth it if they saw how much an insurance policy would benefit them. Are there key benefits, but also balance with the risks of investing in insurance as a financial tool? And how can individuals assess whether an insurance policy is a good fit for their personal finance strategy?
Okay, so first let me clarify that the statement or debunk that notion of insurance is really not an investment per se, because not all insurance products have cash values or that the life insured can benefit from. Because there are term insurance policies where you don't really get anything or cash values out of it unless something happens to you, to your life. So you have to distinguish, number one, what the purpose of an insurance policy is for you. Number one is really for protection, meaning to ensure that if something happens to you, there is something that you can leave on to your beneficiaries. Whether you disrupt, if, for example, especially if you're the breadwinner of the family, so it's very important for you to protect what you call the cash flow through a lump sum amount or through an amount, depending on what type of insurance you get.
We know that some insurance products do serve as investment vehicles, or it has an investment part to it. How do these differ from traditional investment options like stocks or mutual funds? And what are the potential returns and risks involved in these funds? And this is probably one of the things that people believe also. Can returns of those investment vehicles in insurance be zero or even negative, such that one would owe an insurance agency?
Okay. So, since we're moving towards and zeroing more on the hybrid type of insurance and investment. So, there's one type of insurance that has been quite popular, which are called the variable unit link or investment linked insurance products. So, what are these? These are insurance products that have an underlying investment, whether and then the underlying investment can be linked to a certain fund, whether it's a bond fund, a balance fund, an equity fund, and then the way it performs is that if it can be a single pay, meaning, for example, you have a lump sum payment of 1 million, you're already insured for that amount. And then if something happens to you, and then the value of that policy can go up or go down depending on the performance of the underlying asset. Okay, let's simplify it. For example, the stock market. If there are a lot of VULs or variable unit link that have underlying equity funds underneath. So if the equity market moves up, then the policy owner would enjoy your 1 million, can enjoy the benefits of having and participating in the run up of the market. But you will also participate on the downside because the value of the underlying insurance is really dependent on the fund. However, this is where the insurance policy kicks in. If something happens to you, if it's just an ordinary investment product, for example, if the market is down 20% from the time you bought it, if it's just a pure investment product, you just get 80% of the value, right? But since this is a VUL, if something happens to you, then your beneficiary will get 125% of your principal or the face amount that you invested into. So that would be 1.25 million guaranteed, or the fund value, whichever is higher. So if the market is down, at least your beneficiaries are guaranteed 125% of that. But the thing there is, if something happens to you, but at least you know you have a floor and you're paying for that. However, you just have to be mindful as well that there are certain cost implications to this. And you've mentioned that if, for example, the stock market goes down, and then there is also that annual cost of insurance that's deducted on the fund. So there may come a point in time when the if the market is really low, um, if you do not, there's a need for you to top up or add more money to your original insurance policy in order for that insurance policy not to lapse. There are rare cases of that. Well, it really depends on the performance of the underlying security that that insurance policy is linked to.
Well, fair assessment. But now, with increasing life expectancy, I mean, of course, with the improvement in medicine and health and uncertainties brought about by unexpected events, how can insurance products help in ensuring a secure and comfortable retirement? You and I are probably, we have our view toward retirement already.
Yes, and in fact, insurance should form part of a person's portfolio. Because for us in Sun Life, we have what we call four stages. Number one is your basic liquidity needs. Second, as you grow and mature, you have investments. Third line would be protection, and these are where your insurance product should fit. And then the fourth would be the last is wealth transfer or decumulation, or how you would like to enjoy your retirement. So there are certain ways for you to structure or participate in certain insurance products that can allow you, number one, to have endowment. When I say endowment, it's an insurance product, but it has a living benefit. It has um, annual payouts. Sometimes some products can provide annual payouts until age 100. So we've already adjusted the age up to age 100 to, in recognition of the fact that people are in fact living older, living longer. So an endowment product is one product that can help you um, support in your retirement years. At least you can buy it, you pay for it for the first 10, 15, or 20 years while you're still up and about at the peak of your career. And then when you're about to retire, and then you're still healthy, you can still enjoy those cash benefits. And then if something happens to you down the road, the beneficiaries will get the insurance proceeds.
Well, lots of nuggets there that we would want to take a closer look at after the break, though. We'll still come back with Mike in a moment. Follow the Money. We'll be right back. Stay with us. Welcome back. You're still watching Follow the Money. Let's continue our discussion with Mike Enriquez of Sun Life Philippines. Mike, education costs are rising rapidly. How can insurance plans help parents prepare for their children's future education needs? And what should they look out for when they're selecting a plan?
Okay, well, again, insurance is really something that you need to prepare for. You mentioned education, and these are the non-life education plans. Um, I think number one is you need to look for reputable and solid insurance companies that you know that they can see through it, because it's insurance is really more of a promise for a future payment down the road. So it takes several years for you to really realize the benefits of the payment that you've been constantly being giving to the company. So that's the primary criteria. Second is really what do you really intend to do for your insurance? Is it really um, for protection that you, in case you lose your job, um, something happens to you, you get hospitalized, and meet an accident, then at least there's something that you can rely on to continue to build that future expense. For example, an education, a college plan for your child. So these are the things that you need to prepare for. And clearly, sometimes investments, pure investments, may not necessarily um, be enough. Because the difference between a pure investment is really, for example, you can only invest this much. But in insurance, for example, if you want to be insured for 1 million, you don't need to pay 1 million upfront. You can pay in increments, right? And it's our role, in fact, as part of the investments team, is to ensure that annual payment, annual premiums would be invested correctly for us to be able to grow your money, to help you grow your money. And if something happens to you, and your policy is not yet fully paid up, as part of the role of insurances, we will have to pay that upfront fully to you. If, for example, on the second year of payment, if it's a 10-year payment, and in the second year something happens to you, at least your beneficiary is already guaranteed the amount that you've intended as the insurance payout for you. So I think there's a lot of benefits that complements investments, and hopefully people realize that insurance is really not just an expense; it's really a necessity.
So it's almost like you're buying a certain sense of peace of mind and reassurance, but
Exactly.
and still there are many misconceptions about insurance being an unnecessary expense. Perhaps in our last 5 minutes, what would you say to those people who are hesitant to invest in insurance, particularly in the context of recent economic challenges?
Yeah, because right now people think in because we have certain amount of cash flow on a monthly basis, we would like to prioritize, right? But if you think about it, if for those who have houses, for those who have cars, you do not hesitate to insure your house or insure your cars on a yearly basis, right? you, it's for your peace of mind, right? If you buy a car, automatically you need to insure your car, because if something happens, if there's a damage, you will have to pay for it if you do not have that car insurance. Like likewise for a house, if something happens to the house, at least you have fire insurance, for example, that can compensate. All the more, why cannot why can't you insure the person that lays the golden eggs? Yourself, the breadwinner. You need to insure yourself to be able to continue that cash flow for your family, especially if you have kids. So that should be the mentality that if you would like to protect cars, houses, you need to start protecting yourself, your health. If something happens to you, for example, you get sick, you're incapacitated to work for several months, how will you be able to fend for your family? So these are the things that you need to prepare. Um, of course, these are things that hopefully will not happen to you. You will don't want to use it, similar to a car insurance. You don't want to use it because you don't want to damage your car. But at the back of your mind, there's an assurance, there's peace of mind that if ever something happens, I have an insurance.
And it's a great thought to leave our audience with. Always a pleasure, and grateful for your personal finance advice, Mike Enriquez of Sun Life Philippines. Thank you.
Thank you.
And before we go, we leave you with a quote from American journalist Frank McKinney Hubbard. Fun is like life insurance. The older you get, the more it costs. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News channel, always on top.